Well, good evening, all. Ira Epstein with the Financial Market Wrap-Up, and this wrap-up is for the evening of Thursday, the 25th of April, 2024. And we are looking right now at about 6:25 p.m. Central Time. So in looking at the marketplace, wow, a lot of information. I covered this morning, excuse me, in my morning flash update of news and gave you my take on the GDP reading. And simply put, I see the market wobbling now where restrictive interest rates are starting to hurt the economy, but I'm not seeing it yet stopping the inflation pressures. So you've got to get the two coming together. Part of the reason I believe for that is migrant workers hitting the workforce, getting jobs, buying their essentials that they need. They're not getting rich. They've just come over with basically nothing, but they got to have food. They got to have rent somewhere they're going to be living. Whatever it is, whoever's paying for that rent, because some of the states do, the federal government's not offering a heck of a lot of help. Something is happening there. So I believe that is part of it. Not all of it, but certainly part of it. So I'd be watching where we're at. In the morning, we're going to get some key reports. Let me just get to that before we get too far. You're going to get the personal income spending and PCE price index data. Price index data is super important part of it. The initial part of it will be they're looking for the personal income up 0.5% and spending to be up. If you got spending up in that, how do you drive down inflation if people are making more money and they're spending more of the money? That's the problem the market has. So this is the quandary. The high rates slowing the economy down, but not yet in that area. University of Michigan, final consumer sentiment indices, they'll be out at 9 o'clock. Today, you might ask yourself, what the heck happened? Why are we up so much in the NASDAQ, the Dow, and the S&P, especially the S&P and the NASDAQ? The Dow 20 points doesn't mean very much. And the answer is real simple, earnings. You had Snap up 24% the last time I looked. You've got Microsoft coming. You've got Amazon came out. Not Amazon. That's yet to come. Google. So Google jumped 13%. These are big weightings in the NASDAQ. They're kicking the market back up. So not everything is terrible. Some of the tech is good, some is bad. Intel didn't do well. They were down 5%. So you get crushed in one area, you do fine in the other. But overall, the beat is still in the 75, maybe 80 percentile that the companies are doing beats. That isn't terrible. So this pullback in the stock market, I don't think that it's got legs just yet to say, oh, we're going down 10%. We have to wait and see what's going to happen. I have joined the camp, and I've been there that if you've watched me. No June rate cut, no July rate cut. September, you would need to get, here's the only way I see September. The jobs report, forget tomorrow's report, unless it's a big surprise. The next set of reports that begin the game going is a week from tomorrow. That's a week from Friday's U.S. jobs report. If that should come in real weak, I don't see how, but if it should come in weak, and I say I don't see how because I'm not seeing unemployment claims do anything but continue to hang in here at the 200,000 level. They're not soaring, and continuing claims go up one week, down the next. But if that were to weaken, and then the CPI and PPI data behind it later into May were to weaken, okay. You get that again in June, okay. Now the Fed has to make some decisions, all right? They could wait and see July's, but they may say, okay, we got to get ahead of the curve. We don't want this thing to tumble over. That could be September. If these numbers aren't weakening and they're just wobbling, no, they won't go in September. If they go at all, and I don't know that given what we have right now, they got to weaken. If they don't weaken, they're not going at all. But if they go at all, it might be December. So I lean between those two camps. I have an open mind for September, but I'm not in that camp. You got to prove to me that we get the weaker numbers. At some point, the Fed is going to leave data dependency, This is very important, and go to forward thinking dependency. That's how you prevent a hard landing. So they have to make an educated guess based on the data that came in, but then throw that out and say, we don't have to wait for that to go further. Very important. I explained to you, and this is why I'm not yet bearish in the stock market, that I thought on a weekly chart we could get down to the 18-day average of closes and hold it. You don't think we've done that? Now, you wouldn't believe it with the breaks we've had this week, am I right? That you are up for the week, 2.29%. Look at the averages on a number of these indices and you'll go, whoa, it doesn't feel like that, but that's what they are. You had an outside day down today. You took out tonight the high of that. If you've taken my outside day course, and it's on our website, iraepstein.com, go to the word education, the course is there. If you go to that, you'll see the importance of what this just did. I'm not going to go on here to teach you what I teach there. Take the course, all right? When we put the swing lines on, and what these are swing lines. Many years ago, I decided, my son is now late 30s, and I taught him when he was, I think, 13. And I said, I can teach you how to go into any room with my friends, open up a chart, and tell them if the market is trending or not trending. If it's trending, what is the risk associated with the trend? I created a tool for him to do that called the swing lines. And what it does is it looks at the period prior. Now, I say period. You might have a 5-minute chart, a 15, a 30-minute chart. It doesn't matter. A chart's a chart. And I set up 5 rules that I teach in my full charting course as to how you plot this. Now, I put this in charting software. We've licensed it into TradingView to give you an idea. If you have TradingView and you want to get all this, just go to our website and under Client Resources, go in there and sign up for it, and we turn it on for you. But higher highs, lower lows, and it's obviously in our own charting software at Linn. And you can see where the market's at right there. That's not a trend. You have a higher high, lower low. You had a vertical price break. I think you'd agree that every single day you made lower lows and you finally had a bounce in the market. Bounces aren't trend changes. When you come to the daily chart, the market held the first test of a major moving average, a 100-day moving average, almost a half-a-year average when you could count business days. The resistance would be the 18-day average, which the market hasn't yet made it to, but that's the battleground. And the other support factor had been the Bollinger Band, but once you get 4 days of hitting the band in a row and you're making these lower lows, it's called a gorilla glue trade. And the market latches onto it, and you don't know where you're going unless you start looking at key moving averages where it might, in quotes, might find support. That was it. And you're trying to get a bounce. Even notice today how the market bounced away from that. Okay. But I don't see a trend change on the daily charts yet. The slow stochastics lost the embedded reading, and that often means a challenge of the 18-day averages in cards. The 18, because you're already, when that happened, we're over the 100-day average. You look for the closest moving average. It was here. We're pretty darn close. We got to 51.34 tonight. This gave you that signal just to give you an idea, because I believe that momentum leads price often by a lot. The word is often. Is it every time? No. But when this occurred, from here, I'm looking for a challenge of the 18-day average. Now, that'll fall if you've been in a downtrend and price rising, and that's where I'm looking for the two to attack each other. Got it? That's how that works. I teach that in the Enhanced Bollinger Band course. When you come to the NASDAQ, you had lost the embedded reading, but in this case, the 100-day average was the closest objective. It hit it. Today, you had an outside day down, and I find it interesting that the market that's gotten the pop because of the earnings in the tech stocks that came out pretty good other than Intel isn't really taken out the high yet of an outside day down. If it doesn't, you're going to just play around here for a little bit. But the market is at a short sale, not when you're that oversold, in my opinion. In the Dow, you lost the embedded reading, and it should have gone and made a run. The first objective was the 100-day average, the closest number above you before you make these lower lows. Did exactly what it should. No trend. You have a higher high, lower low there. And in the Russell, when you lost this, you haven't hit your objective yet. I contend it's the 100-day average before you hit that low. We'll see if that happens or not. When we come in the 10-year notes, they are still in the bear camp. You can see how this market has still got an embedded reading. In the 5-year, it's the same identical thing. I have traders that were jumping for joy today because in our advisory service, we have been talking the short side, and they've got that, and we started grabbing some money on the break today. You'll say, why? Window envelopes. And I don't show window envelopes in this particular these set of videos. I show in my subscriber videos everything. Here you get pieces. This is the leader into the bigger part that I do each day. And by the way, my subscribers, I had put out a vote. Would they like me to do my morning subscriber video an hour later than I've been doing them? I typically record at 5 in the morning. They voted overwhelmingly, 10-1. Go to 6 a.m. And I do that because that's 7 a.m. New York. It's now going to be 4 a.m. California. In Europe, if you think about it, from Chicago, that often is between 11 and 12. And it's all just as the futures markets are opening. Very, very important. So we're doing that. That change will take place right away. In the eurocurrency, well, you had an embedded reading you lost. The objective was the closest moving average. You just got there. So this has been so far a bear market rally, not the beginning of a bull move at this point in time. Now what it does right here determines the next step, and it probably ties itself into the PCE tomorrow. The British pound also did the same thing. You had a bearish play. You lost the reading, and you made your run. You don't have to believe in this stuff. I believe in it completely. All right. Nothing works 100% of the time, but this stuff I find pretty darn interesting. Lower low, higher high in Bitcoin, the pullback. All the market did is it had a nice rally off the halving, and now it's got to consolidate that. Now, there's word out that in Ether, the SEC they have to make a decision at the beginning of May what they're going to do. The word today that I was reading, I think it was Reuters, is they're not going to go ahead and give Ether the part. Gary Gensler is very anti the cryptocurrencies. So he'll fight that. In the end, the SEC might lose. What's the difference between Ether and Bitcoin is what I don't understand, as long as they follow the exact rules that they approved Bitcoin on. But I'm not the expert on that. We'll find out. When we look at Brent versus WTI, well, you had a nice spike up in the price differential. It's pulling back, but as long as you're over this average, the bias is up, which means Brent is acting stronger than WTI. And today was an important day. You had an outside day up in the markets, and they went right to the 18-day average. Any close over 89.16 sets the market, in my opinion, back into a bull mode. In the WTI, you're getting a bear market rally right into the 18-day average resistance. And for the first time, gasoline is again saying, it's through on the downside. But there's a bigger picture happening in this market that unraveled itself over the past week and a half. It keeps having resistance at the upper Bollinger Band and finds its support all of a sudden, because it hadn't hit this number, at the lower band, and that's what you'd expect. And it goes back to the 18-day average to fight. I think the bulls took control until you take out the lows of the outside day, which is today, of 268.61. And if I'm right, the market might be headed back to the 280 level, the upper Bollinger Band. In nat gas, you've gone from the upper band to the lower. You just keep going in here, and I keep telling you, I'm wondering if this market isn't forming either a base or a top to have another pretty substantial move. You can't tell from which on this chart. So that's what I'm looking at. You know, one of the things for those of you especially that are new that you haven't tried are all the different free offers we have. This is only part of that page. You go to iraepstein.com. And at iraepstein.com, What you do is you'll see under free offers on the top left, you give it a click and these come up. This is how you put stuff in your free shopping cart. You decide what you want, then you put in your name, your email address. It all comes to us and we get things out to you right away. So I think you'll find it interesting. One of my favorite tools is price counts. Why? Number one, you're not going to find it anywhere else. Number two, it works on our charting, our QT platform. Number three, what it does is once a trend sets in, it's a way of looking at the market that I have always found, how does it work? And then at first I didn't believe it. I swear to you, it had to take me 5 years, and all of a sudden I can't stop using it because it gives me an idea where markets are headed. The first objective, the second, the third, it goes up to 5, but typically the highest probability is the first objective and then the second. What other tools do you have to tell you where a market might go with what I'll call a reason to look at it with neat probabilities, all right? Nothing's guaranteed. I wish I could tell you everything's guaranteed. First of all, I wouldn't be telling you I'd be the richest guy in the world. That doesn't happen that way. So what traders do is they look for high probabilities, and that's what we try to bring you with all we're doing. Our charting service, my advisories are here, Linn's advisories to give them a try. You can click up here on an icon. You'll see it if you move your cursor. It'll take you right to the free offer page or iraepstein.com. You have yourself a good evening. I will talk to you tomorrow, first thing in the morning when I review the PCE numbers. Take care.